This video is a review of Mizuho's fiscal year 2024 full-year financial results, period from April 2024 to March 2025. Mizuho Financial Group is a major financial services group based in Japan and one of the Japanese megabanks, along with Mitsubishi UFJ Financial Group and Sumitomo Mitsui Financial Group. FY24 results. Mizuho saw strong overall growth, driven by increased non-interest income and the positive effects of Bank of Japan rate hikes. Both consolidated net business profits and profit attributable to owners of parent reached record highs. FY25 outlook and medium-term financial targets. Mizuho expects steady growth in fiscal year 2025, despite ongoing uncertainty in the business environment, and will manage its business while carefully considering potential downside risks. For fiscal year 2027, new medium-term targets have been set, including return on equity of over 10% and consolidated net business profits of approximately 1.4 to 1.6 trillion yen. Shareholder return. For fiscal year 2024, the annual dividend was increased to 140 yen per share, up 35 yen year over year. For fiscal year 2025, the dividend is expected to rise to 145 yen per share, marking the fifth consecutive yearly increase, up 5 yen year over year. Mizuho also approved share buybacks of up to 100 billion yen. Summary of financial results 2024. Mizuho achieved record-breaking financial results in fiscal year 2024. Mizuho recorded net business profits of 1.14 trillion yen and net profit of 885.4 billion yen. This represents a significant year-on-year growth of 13% and 30% respectively. ROE, return on equity, improved to 9.4%, up from 7.6% in the previous year. These results allowed Mizuho to meet its three-year financial goals a full year ahead of schedule. Like the other megabanks, Mitsubishi UFJ and Sumitomo Mitsui, Mizuho also posted record profits in its financial results. Historical performance. In fiscal year 2024, Mizuho achieved record-high profits, with consolidated net business profits reaching 1,144.2 billion, marking a 13.8% increase from the previous year. This strong performance was driven by solid top-line growth, despite challenges like losses realized in the securities portfolio. The expense ratio, which measures cost efficiency, was 62.5%, slightly down from the prior year, indicating improved operational control. Profit attributable to owners of parent also hit a new high of 885.4 billion yen, a 30% increase year over year. As a result, the consolidated ROE, return on equity, rose significantly to 9.4%, up from 7.6% in fiscal year 2023, showing improved capital efficiency and shareholder value. Both net business profit and net income have been steadily increasing each year. Asset quality. In fiscal year 2024, Mizuho recorded credit-related costs of negative 51.6 billion yen, which was a significant improvement compared to the previous year. Credit-related costs are the expenses of bank records to cover potential losses from bad loans. These include setting aside reserves for future risks or writing off loans that can't be recovered. This improvement came mainly from reversals of reserves inside and outside Japan. However, the bank also made forward-looking provisions, totaling 92.4 billion yen, reflecting a cautious approach amid economic uncertainties. NPLs, non-performing loans, shows that Mizuho's overall NPL ratio remained stable, indicating continued good asset quality. Despite a slight increase in claims with collection risk and special attention loans, these levels were still manageable. Reserves were proactively increased to prepare for possible future credit losses, reflecting a prudent risk management strategy. Overall, while credit costs were still negative, the situation improved year over year, and Mizuho maintained strong asset quality with strategic provisioning to handle potential risks. FY25 outlook. For fiscal year 2025, Mizuho forecasts net income of 940 billion yen. This target reflects a cautious view due to uncertainties in the global economy, such as trade tensions and tariff risks. Internally, Mizuho had considered a target of 1.05 trillion yen, but adjusted the forecast down to 940 billion yen due to the possible negative impact of international tariffs. Despite this, Mizuho expects its business fundamentals to remain strong. New shareholder return policy. Mizuho has changed its shareholder return policy from focusing on the dividend payout ratio to a new policy based on the total shareholder return ratio. The new target is to maintain a total return of 50% or more, with an annual dividend increase of 5 yen per share. Mizuho believes there is potential for exceeding the 50% return ratio, depending on the balance with growth investments. If there are no suitable growth investment opportunities, they intend to return more than 50% to shareholders. For the current fiscal year, they plan to raise the dividend to 145 yen per share and carry out 100 billion yen in share buybacks. Rationale behind revising the shareholder return policy. Mizuho emphasizes the importance of improving EPS, earnings per share. They aim to raise EPS back to at least the record high of 551 yen, compared to 350 yen in fiscal year 2024. While it is difficult to specify when that level will be reached, they are determined to achieve it. To improve EPS, Mizuho will focus on both growing net income and executing share buybacks. Even in the current uncertain business environment, Mizuho believes its portfolio is stable and sound, and is confident in its ability to withstand downward pressure. Through a combination of sustainable dividend growth and share buybacks, the company is strongly committed to raising EPS. Progress in collaboration with Rakuten Group. Rakuten is a Japanese e-commerce and internet services company that offers online shopping, fintech, digital content, and mobile services. One key initiative of collaboration is to sell Mizuho's capital market products through Rakuten Securities distribution channels. Mizuho recognizes that Rakuten Securities has a strong and promising sales network and sees this partnership as a significant advantage. In addition, Mizuho Bank and Rakuten Securities are working together on various cash sweep services. Regarding the partnership with Rakuten Card, the Mizuho Rakuten Card has already been launched, and the number of issued cards is steadily increasing. However, the company acknowledges that the total number is still relatively small and intends to accelerate growth efforts going forward. As is often seen with other Japanese companies, they are aiming to expand their customer base through business partnerships in the financial sector. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,965 yen as of June 2nd, and the US dollar stock price is $5.62 as of June 2nd. The stock price temporarily declined due to the impact of Trump's tariffs, but it has since recovered significantly and is now rising steadily. Current PBR is 0.95 and PER is 10.6. Dividend yield is 3.66%. Compared to the past few years, the current stock price appears relatively slightly high when looking at indicators PBR, PER, and dividend yield. Japanese megabank stock prices continue to soar, supported by their recent record-high business performances. Conclusion. Mizuho Financial Group posted record results in fiscal year 2024, driven by strong earnings and higher interest rates. It surpassed medium-term targets ahead of schedule and expects steady growth in fiscal year 2025, despite global uncertainties. A revised shareholder return policy and partnerships like Rakuten aim to boost long-term value and expand the customer base. The Japanese banking industry looks increasingly promising going forward.